So it should be a lot easier than this. If you can analyze Pyth and create a great trade, then ETH is easy. So
Yes.
so
Well, I can't say I analyzed it, but you did a great job.
yeah, you'll be able to watch this, and you'll be able to watch the Scarto one, which was SUI. I don't know if we'll call it SUI or SUI, but
Right.
that's another one that was literally analyzed on much smaller time frames. He literally was like, I started this trade at 8:45 and it was over by 9:08 and I lost. How did I go wrong? And so I zoomed in and I back tested everything from, that moment forward in 5 minute candles. And we got to see like exactly, how to approach the trade, what the data looked like before, what the data looked like during, what the data looked like after, when to move the stop loss up, when to take those things into consideration and make decisions. And again, they have to be his decisions, but I kind of had a cool little way of using one of these rectangles for the purposes of, um, you know, kind of like deciding on take profit zone as the price climbed. And so there's just some cool ideas in there too. But I figured taking you through a walkthrough on this one just before anything happens would be interesting. But it wouldn't surprise me to see this one move upward. And you have to realize too, some people are willing to lose 10%. They're like, hey, I'm willing to lose 10% if I think I can make 50%. So
Right.
it's all in your threshold. There's just such an extreme probability of success there based on what we know, that if the conditions conducive happens to be displaying favorable data at that point in time, if you happen to be around, that's great. But even as a set it and forget it type trade, it's not that bad. And then you can, like I said, I think it's useful to look at a few different time frames. Like we can see that the 2 day is actually bullish. So I think that's relevant. But where this trade would really get interesting on a larger scale would be if it happens to break, all these things. So somebody who's macro level, which was your initial question, like how do I know macro things? That's where, to me, a great way to operate would be look for things on larger time frames, right? Because the only difference between macro and midterm, or micro, is the time frame that the person's looking at. And so if you want a macro idea or a more midterm idea, then all you have to do is look for more, midterm setups. So you're kind of looking more at all the same things we just went through, but you're looking at the 2 day and the 1 day and the 3 day, and you're identifying, those types of things. Like where would be a good entry here? I don't know if this would be a good entry because we're right here. So I would like to enter maybe somewhere around here when it retests, if it retests. But do I think it's gonna retest? Maybe not, because if I look at the data, the reality is there's a probability that we have a breakthrough. So I don't know. So the person who cares the least wins. So I set my trade there and I just walk away. I just find some really nice asymmetry, set my trade up. If it hits, it hits, and that's awesome. And that's what I would be shooting for. That's one. And then the second person who wants more certainty could also just literally set that horizontal line, and then they just set their alarm clock right there, right? The little trading view alarm clock, and they use the alerts, and they just simply get notified of whatever they want, right? Whether it's I just want to know when the price touches that line for the first time, or B, I want to know when it actually closes above that line on the 2 day time frame. Like that's a pretty big deal in the world of Python. So on the 2 day time frame, I want to know when it closes above that line. We can set all those same alerts on the volatility clouds. So I want to know when Pyth on the 2 day time frame crosses and closes above the red volatility cloud for our custom algos. That's a good one, but it just may not be enough, only because yes, you get the alert that it crossed, and you're like, oh, okay, across the, in this case, the red volatility cloud, that's great. But if you're looking for the, I don't want to do anything stupid, then you have to acknowledge this EMA for the 2-day time frame. So this is the 2-day time frame, 21 EMA. And if you know that that's likely going to be a major resistance, then volatility cloud wouldn't probably be enough. You'd want to just probably set it to close above, like tell me when price action closes above that white line, and then I'll go reassess. But that's not going to be for the 2-hour time frame and the things that we were just looking at. It's a whole different level of trade. It's a whole different world of trade. And the perspective shifts from, that 400 hours worth of time to a much different scale, right? Like now we're looking at the whole world of Pyth, like total price history, and where is it going to go, and is this a bull market, and all those things. Is this asset going to survive? Like all the different things. And so these lines should be irrelevant. There will always be resistances. What should be relevant is maybe this one for short-term trade purposes, and those things that we just talked about, right? The 21 EMA, for keeping in mind, this is for the 2-day time frame. If another beautiful way to do it, since you asked, is we're on the 2-day time frame. So going to movement monitor and then adding alert for movement monitor, adding first time orange. It's going to turn green before it turns orange. So this may be a week out. If it turns bullish in general, this may be a week out. But if you're looking at macro trade setups, this is a perfect way to do it. You would look for the first closed orange movement monitor on the 2-day. And that might actually be a little late. So you might say, well, I don't want to be late. So maybe I want to get alerted when it crosses that 2-day 21 period EMA. And like I want to know that it's past that, because I do think that's a heck of a resistance. And if I wrote this down on paper, I'd say that would be my resistance check. I need to know it's past that before I have any expectations for a longer term bullish move. But if I get past that, then the other thing that would make me really feel comfortable going into a trade, and I'll kind of show you why too, would be that thing I was just about to show you, that first time orange closed, and I would put I would probably literally just put go and long pike or Pyth, sorry. Go and long Pyth, and then I'd probably give my reasoning down here. If 2-day 21 EMA is breached, and this is now orange, I should likely long it or buy some. Because we're playing in a world where we have the choice to buy Pyth, like really own the asset and just stick it in a wallet for a while, and there's no liquidation. It's just like either we made a good investment or we didn't, or we're playing in a world where we can go and long the derivative with whatever degree of leverage we want, even if it's low leverage, right? We could long Pyth with 1x leverage, and we don't really care. We don't want to own Pyth, but we like the idea of owning the price action and the gains that Pyth is potentially going to get us. And so we just do it and then decide on stop loss. And with 1x leverage, your stop loss can be something like 10% or 15%. You're just like, I'm willing to lose. Then it becomes, I'm willing to lose 15% of my investment because I think Pyth has that crazy volatility. And at the same time, I think it's worth it, right? So I would literally do that and use the same things that we do with derivatives trading apply to this other side of things. I know that that's my volatility cloud on the 1-day. I would literally just kind of like plan on somewhat following it upward, right? So I have this really nice logic for volatility cloud, 2 pressure lines. where can Pyth go? Now we go to the fib retracement stuff, right? And we can kind of like figure that out. So I'll do a little bit of that, right? If I go on a long time frame fib retracement and I go like, is this still a downtrend or not? I just gave myself another, okay, maybe that's my take profit. Maybe that's my take profit. Or maybe like right around here, I set an alarm and I reassess. Is Pike truly reversing? And is this just, a small blip in the radar on a huge scale where Pyth is, Pyth's real destiny is to go up and then down, and that's technically a higher low, right? And then like that's how these assets work. But when is that, right? Like if a person's really wanting to play that game and this is it, when is that? That's December. That's December, so that's just the patience side. But that's the macro game, so if like the goal is to play the macro game, then yeah, look at just based on Python what it's done, that's like December of 24. So do I want to play this game with Python for that long? But the reason I draw all that and I share all this is that asymmetry calculator still applies. Some of those retracement ideas can definitely come in and give you a nice advantage. We could talk about fib extensions also, which kind of allow us to forecast future growth and where we might run into resistances in addition to those lines. But otherwise, just looking at this and kind of cleaning it up a little bit, I haven't even thought about it, but while we're in the zone here, look what happened when we had a crossover and the movement monitor went orange the last time. And then look what happened when we had a crossover. And now let's just say the movement monitor went blue the last time, right? And then everything like this became clearly a nice resistance, and it just kind of has gone down ever since. And so like this is just a training call, right? But we may be on the precipice of a Pyth rally, like, because that's what happens, when we have a 1 day time frame crossover, and then per the algo, we get permission to enter longs, a bit more solid permission to enter longs when the movement monitor turns orange. So if it's just green, that's great. It's probably already more bullish, but which it already is. Actually, it's already technically a green movement monitor. But when we actually have like confirmation and it turns orange, which that alert could be set for the 1 day time frame to turn orange, just let me know. Then we have the gift of being able to come back, assess all of the data, long-term, mid-term, short-term, scalping, and decide what we want to do with leverage, derivatives, maybe just spot trading, maybe in the DeFi space. You could probably buy this on 1inch or some Uniswap or whatever it is. And you could literally just stick it in a wallet and own it till December. And if you're right, then here's the other crazy part of crypto. I don't really have to do the math to know it's kind of probably a little crazy, but organically, if it just goes to the previous highs, that is a 141% gain, with again like 10% at risk. If you're doing like organic, right, you could literally risk 10 or 15% of 10 grand, let's just say, to make 25 to end up with $25,000. So again, that's the asymmetry on spot trading. Am I willing to risk $1,500 to make 25,000? Or how much? Where should I set my stop loss? Because I don't want to get stopped out in spot trading either if this thing's on its way up.
Right.
It's super volatile, I think, intra, day and hour, and even in its crazy days, it has some crazy spikes, but it has the potential to be a little bit docile in the grand scheme of, this. So you could literally do something like this, and you'd probably find yourself a nice entry, and you have a lot of logic just without even checking on it. You have a lot of nice logic there for your entry. I'm sure you have a lot of micro and midterm stuff there, but that would be the goal, right? And then anywhere, even here, you could move your stop loss up and just see if you're right, and you ride it to wherever it goes. But if you do fib extension, usually these things end up way up here somewhere. I mean, I'm not saying this will, but it's just like
Right.
crypto happens that way, and then people are then like mainstream people later are like, hey, did you hear about Python? It's kind of like it's already exploded and they're getting into it. But that's cool because it fuels the growth of something that you're already in, that you got into when before it was cool. And that's always great. That happened to me in Pepe in like April of whatever, 2022, I think. Um, and that was pretty crazy. So so yeah, I think that was a lot of stuff I just figured, would be helpful, and I wanted to share some of that. And it was things that I hadn't touched on from macro perspective, so I'm glad you brought that up. But all the different ways that we can interpret data. But did I hopefully answer some of those questions for you as far as like thoughts and things that you might have been interested in?